So we're going to have to go straight to you, buddy, with what's happening in the commodities, in the COT data.
The COT data, well, data, I should say. Almost, I got into the way you say things. The COT data is.
Here we go. You say tomato, I say tomato.
You can take the guy out of Brighton, but
there's no R in the word, Jules. There's no R in the word, so I'm going to stick with data. No, so yeah, pretty much the same as last week, actually. So
okay,
what we've really seen is lots and lots of support for the Australian dollar, and I find what Jules is saying quite fascinating, because I think what we've seen over the last few weeks is an indication that there is some unease in the stock market. But that unease, okay, yes, we have seen a bit of a pullback. But if you're comparing stock markets across the board, and Jules is absolutely right, what you'll normally see is if the S&P, the Dow, and the Nasdaq start to get any kind of snivels, then the rest of the world tends to get a cold, and that's not really happened in the UK and some of the other markets as well. So there's a bit of a disparity going on right now with stock markets, and this turning point, and it could be a turning point. We're either going to go into consolidation, or we're likely to come down, and I think we're all looking for it to come down, but it's taking a little bit longer than I think many of us assumed that it would do. Now with the Australian dollar, you can see here the Australian dollar is still 36-month index 100%, 18's 100%, and 6 months is 100%. So this tends to be a risk-on currency. So, you know, oftentimes when the equities do well, the Australian dollar will do well as well. And we're still seeing lots of buying going into the Australian dollar. You know, that isn't fading over the course of Tuesday to Tuesday to Tuesday to Tuesday. So from last week's print, we're still seeing that support in the Australian dollar, effectively saying that the value of the Australian dollar isn't there yet for it to start to ease off or start to come back. So and this may well be just down to the fact that the anticipation of lockdown could be lifted, and then we start to see the Australian dollar spring back to the upside, or it could be more of a global indication that things aren't maybe as bad or a bit early if we're expecting a big downward moves in the stock market. So Australian dollar still showing lots of positivity, and then we flip to the US dollar, and it is the opposite. Now look at the longs. The longs last week did increase by 84%, and the shorts only increased by 7%. So there is this is a huge jump. This is a number that you very, very rarely see. So even though the COT data is saying here we are, 0% on the shorter term, 22%, so just above where that bearish kind of signal starts to come into play on the COT data. Even though we're seeing this selling, the percentage move in dollars is actually all to the upside. You know, it's starting to filter back through to the upside. So this again goes back to the original point of this kind of this wedge that seems to be involved right now in people's perceptions and people's sentiment, where it could be a very, very tricky time to trade. You know, when you start to see these numbers and they're just out of sync with other things, then it can indicate that we are at a potential turning point, and it does become a more difficult time to trade. And you can start thinking, okay, I've got a great price, I'm ready for the whatever I'm trading to start really moving, and then it just doesn't. It flips around, stays in its range, and starts to come right back at you again, even though it might have gone through the range for a very short period of time. So indications here are be very, very wary of selling the dollar, and due to that, be careful of buying up the Australian dollar just because this is all at 100%. Now, the last one I'm just going to touch on here is gold. And the reason I think gold is now becoming of interest is the shorter term indexes on the COT suggest that there is some buying going on with gold. And we did see a half decent rally back up to the trend line with gold. We have to use the price action, have to make sure that we are still trusting the price action. Behind the scenes, however, it is suggesting that we could, if we can get the price action, which starts to break through levels, we could start to see a bit of a rally from gold, and maybe it's not all doom and gloom and starting to thunder to the downside as we initially thought. So I think for this week, we're going to keep our eyes on the Aussie dollar. We're going to keep our eyes on the US dollar, which is effectively going to cap everything, and we're going to keep our eyes on gold. US dollar starts moving to the downside, then the obvious choice here is to go to the Aussie in accordance to COP. The US dollar starts going to the downside. Another obvious choice could be gold as well. Let's just bring in the seasonals and finish up by seeing what they suggest. On the Australian dollar, it does suggest a pretty good rally right the way through October, coming down around about the third week, but then picking right back up again until around about November. So a weaker dollar could encourage us to go long the Aussie. Now, of course, we don't have to trade against the dollar, so we could be using looking at this against something else. And even though you might start to see some dollar strength, the Aussie may well still be the second best currency out there. So we can look at that. Now let's have a look at the dollar and see what that suggests seasonally. And it looks like it could be getting a little bit sticky around here in October, possibly coming down a little bit, nowhere near as low as it has been, but coming down a little bit. But then again, starting a pretty good rally around about the third week of October. And now this also kind of says to me, seasonally, time to be very, very cautious on what you're trading. And all that means is, don't necessarily expect it to just blast off. You may have to switch to some shorter term time frame strategies to make some money this week and in the next couple of weeks. Finally, we'll have a look at what gold's seasonal pattern is, and gold did not follow the most recent seasonal pattern. Tends to be kind of flat right the way through to the middle of November before it does start a rally again. So if it follows the seasonals, we could be getting some choppy price action, but we should watch out for that, because if gold can hold in this area, then it starts to become interesting towards the end of the year. So that's what I will be looking at currently, Ainsley. I'll be checking out gold more for maybe stability, not necessarily for a trade, but for some stability. Checking out the dollar and of course, because the COP data is so strong, checking out the Aussie as well for some upside.
Just on the Aussie dollar, only because I take a bit of a personal interest on the Aussie dollar.
Yeah.
China during the week, towards I think it was Thursday, had made an announcement. You know how your utilities in the UK are under a little bit of stress?
A lot of stress right now. Yeah. UK's in all sorts of trouble. Yeah. So 10 major or 10 minor utility providers in the UK have all gone bust in the last 2 months. Yeah.
China's not far behind. They are in a pickle as far as their utilities and resources. And there has been a government directive that was announced on Thursday, which you may have seen the result in a push up on oil and gold at the same time. For the Chinese government gave a directive for resources to be adequately provided to the utilities at any cost. So when you've got that, and you've got sort of like, one of the largest trading partners that we've got as far as iron ore, coal, etc., is Australia. I think you might find that little Aussie dollar will do pretty much what's happening on those charts there and have a bit of a bounce. So just in line with what you were saying on a seasonal and on the seasonals and on the COP data, fundamentally with what has happened, it's transpired in the last 24, 48 hours of trading at the end of last week, we saw a lift in the Aussie dollar. So I wouldn't be surprised to see that follow through during October. Right. Interesting point. Yeah. So I'll look out for it. And as for gold, oh my lordy. As I said, we had a bit of a chop and we had a bit of a boost during the week on that Chinese information or that Chinese news, and but we are definitely coming into that choppy change time for the rest of
it's got to hold, isn't it? It's got to prove itself, I think, and I think it would be enough to say if it holds, I think I'd be okay with that. I don't mind if it goes nowhere.
Yeah, look, and you know, I always get to that point where if the setup is there, and at the end of the day, our seasonals are they're only biased. And gold hasn't played ball very much at all with seasonals, especially for the post-presidential election year. Hasn't really played ball. There have been a couple of places during the year it's gone, I am going to play today. But it hasn't lasted very long. And all of a sudden, you know, you get really excited and you think, okay, today is we're off and running, we're at the races, and then it just turned around and gone absolutely back into its box. It's just gone back and consolidated. So there are a lot of factors at play, far more than there were before. And I'm hoping if Shukri is in, we'll have a look at perhaps where alternative money has gone to hedge things like inflation, etc. But just at the moment, I'm going to carry on with just an insight onto gold. Am I up next, Shukri, or are you going to go with Bitcoin and explain what happened?
You can go on gold first.
I'll go on gold first, but don't you go too far away, because I want to know what happened on Friday with just before the close of trade. Well, close of New York, and that's all I see. I don't know whether it's kept going or not, but yeah, I'll have